Yesterday, Tata Motors made a huge decision to demerge its businesses into two separate listed entities. Let's discuss this. Tata Motors currently operates in three segments, which are commercial vehicles, passenger vehicles, and Jaguar Land Rover. Now, with announcements, its commercial vehicle business will be one entity, while the passenger vehicle business, which includes PV, EV, and JLR, would be a part of another entity. After the split, shareholders of Tata Motors will own shares in both new companies. The shares of the company will be split in a 1:1 ratio. This means for every share held in Tata Motors, investors will get one share for each of the newly listed entities. The primary objective behind Tata Motors demerger is value unlocking. This move will give each business more freedom to follow its own growth plans quickly and efficiently. The press release also mentioned that there aren't many overlaps between commercial vehicles and passenger vehicles, but there are significant opportunities for synergy across PV, EV, and JLR. This demerger will help capitalize on these opportunities. Now let's dive into how Tata Motors' two segments, passenger vehicles and commercial vehicles, contribute to the company's financials and what sets them apart. As of the December 2023 quarter data, passenger vehicles including JLR brand accounted for 81% of the company's total revenues, whereas commercial vehicles contributed 18%. Now this already shows a significant skew towards the passenger vehicle segments in terms of revenue generation. Now looking at the performance of these segments, the passenger vehicle segment has been thriving. Notably, Tata Motors PV market share has seen a significant uptick, rising to approximately 14.6%. The PV unit's EBITDA margin stands at a mid-single digit of 6.6%. However, JLR shines with an impressive EBITDA margin of 16%, which boosts the overall profitability of the entity. Moreover, JLR contributes a substantial 73% of the operating profit to Tata Motors as a whole. With JLR's strong order book and improving cash flows, the outlook for the overall PV business does appear promising. Now, it's worth noting that Tata Motors also boasts a robust presence in the electric vehicle space, commanding an impressive 73.2% market share in EVs. Now, shifting our focus to the commercial vehicle business. Now, this segment maintains a healthy EBITDA margin of 11.1% and consistently generates strong cash flows. Tata Motors commands a market share of around 38% to 39% in overall CV sales, solidifying its position as the market leader. Now, given the promising growth prospects of the PV segment, it's likely that it could be assigned a higher valuation. However, the true value of the segment will only be realized once it's listed separately, shedding more light on its financial performance and potential. The announcement of the demerger is not a complete surprise. As mentioned in the press release, each division, which are PV, JLR, and CV, have been operating independently under its own CEO since 2021 and have also adopted distinct growth strategies. The demerger itself is a pretty involved process that's expected to take quite a bit of time, roughly around 12 to 15 months. This is because it involves getting approvals from various parties, including shareholders, creditors, and regulatory authorities. Now, when it comes to Tata Motors stocks, it's important to note that it is present in benchmark indices like Nifty and Sensex. However, with the demerger happening, there's likely going to be a shuffle in Tata Motors composition within these indices. Nuvama Institutional Equities have pointed out that after the demerger, the commercial vehicle entity of Tata Motors, which might become relatively smaller in terms of market capitalization, could possibly drop out of the benchmark indices. On the flip side, the passenger vehicle business is expected to remain part of these leading indices even after the demerger. Now, these were some key highlights you had to know as an investor. Having said that, this is me, Merlin Zana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.